Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, we're going to be having a look at the 100% signal, which confirms that we should be getting a big blow off top for the end of this bull market. I'm also going to be having a look at one danger that everybody should be aware of, just to mitigate anything unexpected that Bitcoin may want to do once we get past the 112,000 all-time high. And as per usual, we'll have a look at the 60-day cycle, where we are currently and where we're heading in the coming days and weeks. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. And as per usual, the polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, in last week's members video, I brought to the attention of my members this 100% accurate indicator which just flashed a couple of weeks ago. So it's something that I wanted to share here with the rest of the subscribers, as it's giving us a very strong clue that we may well be heading for a big blow off top. So what is this indicator I'm talking about? So in the last 5-6 years, if you've been watching my videos, you'll know that I've been using this hash ribbons, that whenever we flash this, we do tend to get quite a big rise after the blue dot. Before I show you the measurements of the previous dots that we've had, for those of you who are interested in this indicator, if you go to the indicators and type in hash ribbons, the one that I'm using here is by Capriole, the one with 15K here. And the settings are these for the inputs. These are the default settings, and for the style and for the visibility. And because we're coming up to the final stages of the bull market, where we hope the price will go to much higher levels by the end of this year, what I'm going to do is I'm going to take the last blue dot before the end of the bull market in each of the cycles. This was the last one here for 2017, and this one was the last one here for 2021. But each of these blue dots has led to a bigger increase subsequently. I think the only two that were around about the same were these two here, because they flashed right at the bottom of this bear market, and they were around about the same price here. So apart from these two, every one of them led to a substantial increase in the following weeks and months. So let's have a look cycle by cycle exactly how these blue dots have affected the Bitcoin price. So this was the first cycle, which ended at the end of 2013, and the last blue dot that we got was on this green candle. And if we take it from the bottom of that candle to the top of the bull market, that was a 5,642% increase after that signal that fired at the beginning of 2013. And in 2017, this was the last buy signal here. And if we take it from that candle to the top of the market at the end of 2017, that was an 8,297% increase. And in the last cycle, which ended in 2021, and obviously we had a double top there at 64,000 and 69,000. So we can take both of those signals before each of those double tops. The first one here was on this candle, and to the 64,000, that was a 254% increase. And then this signal here before the 69,000 top was from this candle here, and that was another 80% increase. So you can see quite clearly that 80% is the lowest we've ever had so far. And this is the current cycle that we're on. And we just flashed this signal here a couple of weeks ago. And obviously we're waiting for this blow off top from where we are to the end of the year. And even if we got an 80% increase from here, which is the minimum that we've had at the end of each of the cycles, that would take the price to around about 180,000. Of course, nobody can guarantee that. These are all probabilities based on a historical perspective. But what we do know with these blue signals is that they do tend to trigger off big moves in the Bitcoin price. And if the patterns are to repeat, then the chances are, the likelihood is, and the probability is that we're more than likely going to get some sort of a blow off top here. And obviously, we've got to always look at it in a balanced view. And there's one danger that I want to point out a little bit later, which everybody should be aware of, in case Bitcoin does something quite different. Okay, moving on to running down on the various time frames for Bitcoin, there are some incredible amounts of information that the Bitcoin price action is giving us. It's something that we need to pay attention to. And at the end of the day, everybody can make up their own mind. I'm just giving you my insights on the various time frames, and then you can take away from that whatever value you can from it. So the first time frame I'm going to have a look at is the monthly time frame. So this is where we zoom out and have a look at the overall bigger picture of where Bitcoin may well be heading. And as I've just shown you with the hash ribbons, this seems to have a confluence with the 80% rise that we got in the last cycle after the hash ribbons. What I've shown you is the red line, which I've marked up for the end of 2025. So this is the December 2025 line, where we expect around about this period where the bull market will end. And I've also marked up the last 2 points of the Bitcoin price. So this is taking it from this high around about the 73,000 and the 109,000 that we made here. So when you just take the line across, it seems to cross the red line in December 2025 at around about the 180,000 mark. Of course, we shouldn't get fixated on this figure. It can be anywhere. As you saw with my default chart, I've marked the end of the bull market from about 150,000 to 500,000 because it can be anywhere. Nobody knows the future, and all we can do is use the charts to give us some sort of an insight of where it might well be. And of course, we can draw a parallel line at the bottom with all the supports, taking us all the way to the end of this year. And so far, what we've done is we've bounced off this support line twice there, and in April we bounced off it one more time. So far we've reached the 112 in the last month's candle, and this month we may well go above it. And when we have a look at the 60-day cycle, you'll see from there that there is a high likelihood that we're going to surpass this May candle. And also we have this 8 EMA, the blue line that's been protruding all the way through here, and this is one of our signals that if we do close below the 8 EMA, that will be, as per the historical perspective, what's happened in the past. Once we have a candle closing below the 8 EMA on the monthly time frame, that is usually the signal for the end of the bull market and the start of a bear market. So this is one of the signals here, apart from our Brexit indicators. And if we move on to the weekly time frame, what we got yesterday in the weekly close for Bitcoin was this bullish dragonfly doji candle. This is the one with a long wick at the bottom and a very little body at the top. And we also saw that it bounced off in the week above the 8 EMA. So this seems to be giving us a signal that we're good to go to the higher side. And always remember, with these dragonfly doji candles or gravestone doji candles, which is the opposite of that, whenever you get a long wick, there's always a 50-50 probability that you get a run down on these. So it's perfectly normal for the current candle here to run all the way back towards the bottom of that to retest and scare off a lot of the weak hands out of the market before doing this. If you look left here, we've got a similar candle here, a shooting star, and this was telling us that the price is going to go to much lower levels. However, before it did that, you can see with the next candle, it had a run on the wick of that candle previously. So it wouldn't be a shock or a surprise if the current price this week came back down to those levels before we do that. And of course, it can still march on like this. But the overall message of this candle here is that we're on our way to much higher levels. And we can have a look at the daily time frame through the eyes of the 60-day cycle, which is the framework we've been looking at. And the first thing to notice here is that we have actually come to the end of the current cycle. So from the last cycle to last Thursday, that was 59 days in the 60-day cycle. So it looks like, with a high probability, that we bottomed out on this red capitulation candle last Thursday. And on the Friday, we got this big bounce from it. And we'll confirm the beginning of the new cycle once we get above the previous high, which is this candle here. And the high of this candle is at 106,854. So if we call this 107,000, once the price gets above this level here at 107,000, it will then confirm this red capitulation candle as the end of the previous cycle and the beginning of the new one. And if we move this chart to the left here, we can see that I've marked up the end of the current cycle. If this indeed is the beginning of the new cycle, then this red line here will be the end of the current cycle on the 4th of August. And the midpoint of that is going to be around about the 5th of July. So what we've really now got is a setup which is incredibly bullish, which is that we're in the time band for the start of the new cycle here. And as I've just shown you on the weekly time frame, we've got a dragonfly doji candle, which at the bottom of a trend is a bullish signal that we're going to go to much higher levels. And at the same time, we've bounced off in the last few days with a strong bounce from the bottom of the potential new 60-day cycle. And if you've been watching my videos, I've been mentioning that if we can close above the 100,000 at the end of the cycle, then it gives us a very good opportunity to retest this 112,000 with so much time now left at the beginning of the new cycle here. So we've basically got a good 2 or 3 weeks run into the midpoint where we expect some sort of a decline before we go back up towards the end of the cycle. So what we can see here, the potential is this, that in the next few weeks, if we can get above the 112 before the midpoint, so if we do this, it will give us an opportunity to come into the midpoint and use the 112 as the support before going into the end of the cycle at the beginning of August to much higher levels. And really it's anybody's guess because there's no other resistance levels after 112. So the price really has a freedom to roam around to whatever price it wants to go to. We can see with the stochastic RSI, we're going into bullish territory here. So we should have a nice run up over the next few weeks into the midpoint towards the end of this month. And at this stage of the bull market, we should get another right translated cycle. So what we really can expect here is for a good run into the midpoint, a pullback maybe to the 112, and then to make a new higher high in the second half of the cycle, which makes it into a right translated cycle. And I went through that in the last week's video on Monday, that just from a cycle's point of view, we should get a good blow off top between now and the end of this year. So this is where the potential is to make much higher levels than the 112,000. And a few weeks ago, I mentioned this inverse head and shoulders pattern that could possibly be developing. So if you've been watching my videos, you'll know that a few weeks ago, I mentioned this inverse head and shoulders pattern that seems to be developing with a right shoulder on this right hand side. So what we did was we went into resistance here, and then since then we've fallen down, and what we can expect with the 60-day cycle, as I've just mentioned, we should get a big run up here to retest this 112. So that would be the end of the right shoulder. So this is what we've really got, a perfect storm brewing here, an inverse head and shoulders on the daily time frame in the same time band as the beginning of a new 60-day cycle. At the same time, we finished the weekly candle on a dragonfly doji candle at the end of a 60-day cycle. So now we've started on a new cycle with all these bullish characteristics. So the higher probability play for Bitcoin is now to the upside. And as I gave you the measure before, that this inverse head and shoulders, from a classical charting point of view, it gives us a certain price based on this particular pattern. Of course, this is not the only thing that you have to look at, but if the price was to play out to this pattern, and please remember there are many ways to measure these patterns, and this is the measure that I take, and if you take a different measure, that's absolutely fine, but I can only give you the measure that I use. So if we take it from the bottom of the head to the 112,000, that gives us around about a 49-50% upside from the break of this pattern here. So 50% from the break of this neckline would give us a price of around about 160,000. But from an overall bigger picture point of view, our targets are always going to be based on the Fibonacci retracement. And these are showing us on the overall bigger picture. These are the targets we've had a look at for quite a while now. And that is that from the previous all-time high of 69,000, where we topped out in 2021, to the bottom of the bear market at 15,400. So taking the Fibonacci retracement from those 2 points gives us these targets here of 128,000, which is the next level you would expect some sort of a correction. And then after that, there's 61.8 at 175,000. And then it can be anywhere around here between 450 to 500,000. So it's anybody's guess. Everybody can make up their own mind where you can expect this price. But I'm just using the Fibonacci retracement to give you some sort of an idea, an inkling of where the price for Bitcoin may well be heading. And that's why we've got our targets from around about the 150,000 all the way up to the 500,000. So this is where you would expect, with a higher probability, the price of the Bitcoin price to end at the end of this year. Okay, so that sounds all hunky-dory. So where is the actual danger here? Let me just point out something, and that is that through the eyes of the 60-day cycle, if indeed we do go above the 107,000 at this point to confirm this as the end of the last cycle and the beginning of the new one, and knowing that we're now in the final stages of the bull market where we would expect some sort of a big run towards the end of this year. So what we should not be getting is, let's say we go above the 112,000 here. If we make it above the 112,000, if the price doesn't make much progress up there and starts to come back down and takes out the low on the Thursday candle, which is 100,000, if it takes out the low at this stage of the bull market, this is not something that should be happening in the final stages of the bull market. So therefore, if we do take this level out, this is where you would have a red alert sign that is something that it shouldn't be doing at this stage of the bull market. That would be a danger sign that we may well have got another double top wherever this top is going to be. So this is where we've just got to be a bit alert, a bit sensitive to price action. Bitcoin starts turning around from here. The first sign would be to break back below the 112,000, but the bigger sign would be the break below the 100,000. And of course, we don't want that to happen. But if it does, then at least we're alert to the possibility that if we break below this level here at 100, when those conditions are met, then the market is telling us that we may well have topped out. Okay, also a quick reminder that on Wednesday this week, Wednesday, June the 11th, we've got the CPI data coming up, which normally causes quite a bit of volatility in the Bitcoin price. So keep an eye on that. A quick look at the liquidation heat map. This has proved very accurate in terms of giving us the range of prices that we can expect with Bitcoin in the next 24 to 48 hours. And at the bottom of the range, we've got 104,600. And at the top end, it looks like we're just about hitting there. It's about 106,600. As you can see, there's quite a lot of areas at the top side here developing around about the 108,000. We may well be going up there during this week. And if we move on to gold, what we're really seeing is a certain pattern developing at the top of a trend here. So we've had a very big move for the last 18 months or so. But what we're now seeing with these candle formations is some sort of a loss of momentum. So you got this long-legged candle here in April, and that is usually at the top of a trend with a loss of momentum. And then you get the indecision candle, which is this one here. And so far, we're contained within the tops and the bottoms of those candles. So this looks like it may want to have some sort of a breather before we start moving to the downside. But how far we come back, we really don't know. However, if we move on to the weekly time frame, that may be giving us a bit of a clue. If we put on the 8 EMA, what we found here was we got this dragonfly doji candle, which I mentioned at the time that we can expect some sort of a consolidation or a pullback for the gold to much lower levels. However, as we can see, the 8 EMA is something that's been incredibly supportive for the price of gold all the way up here. And so with this particular candle, which threatened to go to much lower levels, however, it's telling us that there's a lot of demand for gold as the price was pulled back right up to the support of the 8 EMA. Since then, we've been getting support on that line. And last week, we did get a shooting star bearish candle here. Well, once again, it may well be only up to the support line of the 8 EMA. So what this is really telling us is that there isn't much of an appetite for this to come to much lower levels. And with Bitcoin waiting to go into the final stages over the next few months, we may well see gold going to much higher levels once we get this consolidation out of the way. Okay, I'm going to show you a particular chart which I don't normally show in this channel. And this is a chart that we regularly look at for the private members. And I do read a lot of comment, not just on this channel, but in many of the other channels which cover the Bitcoin miners. And it's entirely understandable because the Bitcoin miners, especially over the last 18 months, haven't performed very well, especially against the Bitcoin price. So this particular chart is the WGMI against the Bitcoin price, and the WGMI is the basket of the Bitcoin miners ETF. So what you've got here is a number of Bitcoin miners and their share price relative to the Bitcoin price. And this is where the charts really come into their own, and that is that we have a support line at the bottom with this white line and also the resistance point at the top. And what we see with some of these signals is that whenever we get a buy signal, especially on the support line here, there is usually a big move to the upside. And we've been monitoring this from the bottom here. And so far, while everybody's got a negative view of the Bitcoin miners, because of what's happened here since the middle of 2024, they have been on a rundown against the Bitcoin price. However, if you can take the emotion out of it and take an objective look, most people miss the bottoms here. And this is the reason why most people get in at the top and get out at the bottom, because they get exhausted down here. And this is why taking the contrarian view is often proved to be quite profitable, because it's at this point when everybody's selling that the prices start to do the opposite. So what we've really got at the moment is that in the last few weeks, while everybody's been knocking the Bitcoin miners, they've been quietly going up against the Bitcoin price by over 40%. And we've had this target here of the 61.8 Fibonacci level at around about 19. So we've gone from around 13 to last week's close of around about 1834. And as we can see, whenever we've come to the bottom of the support line, we always seem to go to the top of the resistance point here. So we've still got quite a bit to go to the top of that trend line. And who's to know that we may even break it towards the end of this bull market. And last month I showed you that whenever we get this green buy signal, and we've only had 3 in the last 7 years, and we've only had 3 of these in the last 7 years, we got one of those in the April candle here. And since then, we're still right at the bottom of that trend, because at the end of the day, nobody knows how far this is going to go. towards the end of the bull market. So if Bitcoin does double up or goes up to 160, 180, whatever level it goes to, then this is going to be, as we've seen with the relative chart with Bitcoin, it's really set up to outperform Bitcoin in the next few months. Of course, nobody can guarantee that. We're in a game of probabilities, and we can only look at the charts to judge what may possibly happen. So in the last 7 years, when we've had this green signal here, price has gone up for Marathon, which is one of the main Bitcoin miners. 7 years ago, this went up by 1,900%, and we got this towards the end of the bear market. Although it went down a little bit lower, but from this point here to its recent top, it had still gone up by about 500%. So these signals are quite powerful, and we may well be seeing the beginnings of another big move to the upside, at least for the next few months when we get to the end of the bull market. Because with the Bitcoin miners, anything can turn around very, very quickly. Obviously, nobody can guarantee that. And in the private member section, while the miners have not performed as expected, however, some great opportunities came along. And we'd been doing these ratio trades since the beginning of 2024. And those members who took the trades would have got incredible returns. So since the beginning of 2024, you can see these profits in blue. We've done about 40 trades. And the thing with trading is that it's all about the small successes that really help you to make progress. So those members who took these trades would have got something very similar to these figures here. The red figures are the losses here. So we've had 3 not very good trades. But the majority of the 40 trades that we've done have been in profits. And of course, the members can choose not to do those trades, and many haven't, but those who did have done incredibly well. And so far, we've got 2 opportunities on the horizon, which we're waiting for, which should give us substantial profits of around about 25–30%. We do 2 videos in the members section, one on a Wednesday and one on the weekend. And in the next video, I'm going to be going through some key levels for the Bitcoin miners, where there will be great opportunities for trades. So as we see the price for the Bitcoin miners rise to whatever level they go to, we know from the resistance levels and the Fibonacci levels that there will be key levels at which there will be some pullbacks. And those of you who don't know what we do in the member section, we do 2 videos a week as well as do ratio trades. So on the channel, what we do is we do a market update every day, Monday to Friday, at the end of the trading session, where we do a summary of what's happened in the day, so we can keep our focus on the daily activities of what's happening with Bitcoin and the Bitcoin miners. And if there's anything important like charts and what have you to highlight, like we've just had an end of the cycle, we've been monitoring that for the last 2 weeks, waiting for the end of the cycle, and it really helps in making decisions of when to get in and when to get out. So if you're interested in more interaction with the channel, then all you have to do is click on the join button below any of the videos here, as well as in the description box, you've got the red button here as well. And if all that is worth more than a coffee per week, then you can join a growing band of people who are focused on looking at Bitcoin and the Bitcoin miners on a daily basis. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.